Today, I want to take you in the world of crypto, specifically Bitcoin and XRP. There's been a lot of buzz around these two lately, and I've got some fascinating insights to share from crypto trader who's been in the game since 2017. Now, let me tell you something incredible. This trader is predicting a potential 500% jump for XRP. Similarly, what we saw between November 1st and December 3rd, I know it sounds bold, especially considering XRP's recent 25% dip, even while Bitcoin was hitting new highs. But here's what's interesting. This trader actually predicted that pullback. They described XRP like a slingshot being pulled back, building tension before launch. The reasoning behind this is fascinating. Right now, everyone's laser focused on Bitcoin. All the hype, the ETFs, it's pulling attention and resources away from altcoins like XRP. But once this Bitcoin frenzy cools down, we might see attention shift significantly. Here's another crucial piece of the puzzle. There's an anticipated XRP ETF that could be approved by March 2025. This could be a massive catalyst, potentially attracting institutional money into XRP, just like what we witnessed with Bitcoin after its first ETF launch. Let me break down something important: Bitcoin dominance. Currently, it's at 54%. Meaning Bitcoin accounts for more than half of the entire crypto market value. What's fascinating is that if this dominance drops, if Bitcoin's share of the market shrinks, it could signal a major shift in market dynamics that could benefit altcoins like XRP. Now, I need to address the risks because they're just as important as the potential rewards. The regulatory landscape is always a wild card in crypto. While I'm optimistic about an XRP ETF, there's no guarantee. The approval process can be unpredictable, and if regulators decide to delay or reject it, it could significantly impact investor enthusiasm. Let me explain how these ETFs work, because it's crucial to understanding the bigger picture. A Bitcoin ETF lets gain exposure to Bitcoin without actually owning any cryptocurrency directly. It's essentially a basket of Bitcoin holdings traded on a traditional stock exchange, making it more accessible and regulated for institutional investors. Here's where it gets really interesting. We've seen a massive influx of institutional money into Bitcoin, driving up both demand and price. The trader I've been following believes we could see a similar scenario play out with an XRP ETF, especially if it coincides with a decline in Bitcoin dominance. But there's something even more mind-blowing I need to tell you about. There's this bill that, if passed, would authorize the U.S. Treasury to purchase 5% of all Bitcoin. Just think about the implications. It could trigger a global race among governments to acquire Bitcoin, potentially leading to unprecedented price appreciation. If the world's largest economy starts buying Bitcoin, other countries might feel compelled to follow suit. It's a double-edged sword, though. While government involvement could bring more stability and appeal to institutional investors, it might also raise concerns about control and manipulation. This is why I always stress the importance of not solely relying on technical analysis or price predictions. I've seen how interconnected everything is in the crypto market, and it's fascinating how seemingly separate events can converge to create significant market shifts. When I look at both technical analysis, the charts and patterns, and fundamental analysis, the underlying market drivers paints a complex but intriguing picture. Let me emphasize something crucial here. While these predictions and analysis are exciting, we need to approach them with a healthy dose of skepticism. I've been in this space long enough to know that crypto markets are notoriously volatile, and past performance doesn't guarantee future results. What I find particularly compelling is how institutional interest has evolved. The introduction of ETFs has created a more legitimate pathway for traditional investors to enter the crypto space. It's no longer just about individual traders and crypto enthusiasts. We're seeing major financial institutions getting involved in ways we couldn't have imagined a few years ago. Think about it. When the first Bitcoin ETF launched in early 2023, it triggered a massive price surge. Now, imagine that same effect potentially playing out with XRP. If this coincides with a decline in Bitcoin dominance, we could be looking at a perfect storm of market conditions. But here's what I always tell people: don't just follow the hype or try to time the market perfectly. It's about understanding the bigger picture, the forces at play, and making informed decisions based on comprehensive research. Whether you're looking at Bitcoin, XRP, or any other cryptocurrency, you need to consider multiple factors: regulatory environment, market sentiment, institutional adoption, and technological developments. Gary Gensler, let me share something personal. Throughout my time following crypto markets, I've learned that timing isn't everything. What matters more is understanding the underlying trends and having a clear strategy. When I look at the current market conditions, I see both opportunities and challenges. The potential for an XRP EF by March 2025 is particularly interesting to me. If approved, it could open the floodgates for institutional investment, similar to what we've seen with Bitcoin. But remember, Gensler, finally, this isn't just about price speculation, it's about the broader adoption of cryptocurrency in traditional finance. I want to be crystal clear about something. While the trader's prediction of a 500% increase is exciting, it's essential to understand that such predictions are never guarantees. I've seen too many people make investment decisions based solely on price predictions, only to be disappointed when markets move differently. Here's what I believe is the most important takeaway, whether you're interested in Bitcoin, XRP, or any other cryptocurrency. You need to do your own research. Don't take anyone's word for it, not mine, not even experienced traders. Look at the data, understand the technology, follow the regulatory developments, and make informed decisions based on your own analysis and risk tolerance. The crypto market is evolving rapidly, and what we're seeing now with ETFs, institutional adoption, and potential government involvement could reshape the entire landscape. But with these changes come both opportunities and risks. The key is to stay informed, remain skeptical of overly optimistic predictions, and never invest more than you can afford to lose. As we wrap up this deep dive into crypto, remember that the market will continue to evolve, and what matters most is having a solid understanding of the fundamentals and a clear strategy for your investments. The future of crypto is exciting, but it requires careful consideration and due diligence. If you found this analysis valuable, don't forget to smash that like button and hit subscribe. Turn on notifications to stay updated with the latest crypto market insights. For real-time updates and exclusive market analysis, join our Telegram channel, Finance With Them. We share daily market updates, trading signals, and in-depth analysis that you won't find anywhere else. Click the link in the description to join our growing community on Telegram. Meal, Finance With Them. Remember, knowledge is power in the crypto world. See you in the next video.